Hello everyone. We discussed directive number 1 on the previous video, and now let's move to directive number 2. This directive is very long, so let's do it by parts. And this video consists of the points up to provisions regarding grace period. Directive number 2 is provision related to loan disbursement, classification, and loan loss. The very first point in this directive is classification of loans. So, based on the period over which the principal or interest of loan or credit is due, loans are divided into performing and non-performing. Performing loan consists of pass and watch list loan, whereas non-performing loan consists of substandard, doubtful, and loss loan. Now let's do it each of them. First one is pass loan. Loans are advances which have not overdue and which are overdue by a period of 1 month. Loans taken against the security of fixed deposit receipts. Loans are advances against Government of Nepal securities, and loans are advances made against the collateral of Nepal Trust Bank bond. Gold and silver loan disbursed up to Nepalese rupees 10 lakh per customer with sufficient security, provided that the cases of loans and advances against the fixed receipt or Government of Nepal securities or Nepal Trust Bank bond, and if the gold and silver loan exceeds rupees 10 lakh, such loans and advances shall also have to be classified in accordance with the overdue status. The next is watch list loan. Loans or advances which are overdue by a period from 1 month to a maximum period of 3 months is a watch list loan. Short term or working capital loans that have not been renewed within 1 month or have been temporarily extended up to 90 days. Loan disbursed to borrowers classified as non-performing loans in any other banks or financial institutions. Loan given to firms, company or institution that have been paying interest and principals regularly but have a negative net worth or have been operating at a loss for 3 consecutive years. However, in the case of loan provided to projects under construction, this provision will be applicable only on the basis of the financial statements of 3 complete fiscal years after the project commences commercial production. Multi-banking loans of rupees 2 billion or more that have not been converted into co-financed loans that have been instructed to be kept under close monitoring based on borrower's poor cash flow and project operation status during his bank's inspection. Loans outstanding with a debt equity ratio of more than 80:20. While revaluation of the assets for this purpose, any firm, company or institution will be allowed to count only assets created in full compliance with accounting standards related to assets revaluation in equity. Similarly, loans that have not been maintained the debt to income ratio as prescribed by the bank, loans provided to industries, projects or businesses that are not in operation due to situational factors but are making scheduled principal and interest payments regularly. This is all about watch list loan. Now we have substandard loan, doubtful loan and loss loan. Substandard loan are loans which are overdue for 3 to 6 months. Doubtful are those which are overdue for 6 months to 1 year, and loss loan are those which are overdue for more than 1 year. So it means performing loans are those loans which are overdue for the period up to 3 months, and after that all the loans are non-performing loan. The next point is additional provisions relating to pass loans. So, the licensed institutions should only disperse or renew loans in a manner that ensures proper utilization of the loan after analyzing the minimum basis for disbursing loans, such as the borrower's ability to pay the loan, future cash flow, and source of income. Next is additional provisions relating to loss loans. In case there seems any of the following discrepancies in any of the following loans, whether or not the deadline for repayment of which is expired, such loans and advances has to be categorized as the lost loan. The very first point is the debtor disappears or is not contacted for 90 days. Next is the loan is misused. The next is except in the circumstances, like loans provided to industries, projects, or businesses that are not in operation due to situational factors but are making scheduled principal and interest payment regularly. So, if the project or business is no longer in a condition to operate or no longer in operation, except the given above circumstance, in the event that the promissory note, guarantee, and other contingent liabilities are converted into a fund-based loan in the form of a forced loan, if such loan is not recovered within 90 days from the date of conversion. However, in the case of forced loan created by claiming the collateral of the construction business, if the loan has not been recovered for 90 days for the financial year 2080/81 and has not been classified as bad, such loan shall be classified based on the period during which the loan exceeded its value in the financial year 2081/82, and loan loss provision shall be made accordingly. Similarly, in cases where the auction process has begun due to failure to recover the debt or a case is pending in court under the recovery process. Next, providing new or additional loan to borrowers who have been enlisted in the blacklist of Credit Information Center. If the market price of the collateral cannot secure the loan, for this purpose, security shall refer not only to the immovable property collateral but also to the project and the movable assets of the project. If the payment for purchased or discounted bills is not collected within 90 days from the due date, in case the loan in the name of an individual or firm or company is used by another firm or individual or company, but in case of the firm or company belonging the same group, there will be no impediment to maintaining the total limit. If any new loan which is not mentioned at the time of opening the promissory note is approved and disbursed for the purpose of repaying the trust receipt loan, and the credit card loan is not written off within 90 days from the date of expiry of the deadline, in cases where the borrower has submitted different financial statements for the same date or period, if a loan or credit is provided to a related person or organization by taking loan from a bank or financial institution. Now, additional provisions relating to term loan. So, in cases of the term loans disbursed in installments, if the deadline of the installment of the principal amount expires, remaining entire loan amount has to be classified based on the expiry of the deadline of the installment amount. In the case of loans disbursed to the hydropower projects, power transmission lines, cable car construction projects, and renewable energy projects, if any installment is more than 90 days past due, the entire amount of such installment will have to be classified as bad and 100% loan loss provision will have to be established for the installment. Point number 5 is additional provisions relating to gold or silver loan. The licensed banks and financial institutions of classes A, B, and C may provide loan having mortgage, gold or silver subject to the following conditions. The conditions are: the provision of providing loan by mortgaging gold and silver has to be stated in the credit policy or bylaws of the institution. Next point is, prior to carry out transaction of gold or silver loan, provisions relating to necessary security, evaluation of the collateral, vault insurance and checkers have to be made. When disbursing a loan secured by gold or silver to an individual, the loan must be disbursed only after verifying the gold or silver provided as collateral by the borrower and confirming that the loan is secure. When disbursing a loan in this way, the gold or silver provided as collateral by the borrower must be kept in a single bag. In case a loan is disbursed against gold and silver collateral by placing more than one bag given by a borrower, or by placing only one bag containing more than one bag, or without testing the gold and silver, 100% loan loss provision will have to be made for such loan. The single customer loan limit for this type of gold and silver collateral loan has been set at Rs 5 million. In the case of loans disbursed earlier, the single customer loan limit will have to be established by mid-ASAR 2083. Now, point number 6 is principal and interest not allowed to be recovered, crossing the overdraft limit. It is not permitted to recover the principal and interest of the loan by overdrawing the customer's current account beyond the overdraft limit. If the account is overdrawn and the account is not cleared while recovering principal and interest by debiting the account of the customer, the amount overdrawn shall also be included in the loans not recovered, and such loans have to be classified in one class lower than the class to which such loans belong. However, this provision shall not be deemed to prohibit the recovery of principal and interest by spending the balance in customer's account. Now, the last point, point number 7, provision regarding grace period. Generally, term loans cannot be provided with a grace period of more than 1 year. If a longer grace period is required according to the nature of the business and project, the authorized officer may make a decision based on the project report submitted by the borrower and its justification, explaining the reasons and basis for the need to establish a longer grace period, and its approval shall be obtained from an officer one level higher than the authorized officer to sanction the loan. The highest level for this purpose shall be the Board of Directors. Once the stipulated grace period is extended, such loan will be considered as restructured or rescheduled, and loan loss provisions will have to be made accordingly. However, if the grace period is extended due to the change in the required commercial operation date of power projects, or the completion of a hydropower project, but the project is not operational at full capacity due to the lack of construction of a full capacity transmission line, restructuring or rescheduling will not be considered as having been done.